Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Scott Melker, crypto trader and investor, host of the Wolf of All Streets podcast, and author of the Wolf Den newsletter, to discuss how the FTX failure could impact the crypto regulatory landscape and investor protection. Scott, it's great to see you as always. And for our monthly segments, we were just talking in October how things have been relatively quiet since June. I mean, the crypto market was essentially decoupling from what we saw in the macro space, and I just think this was a very unexpected black swan event. It was the last thing that the space needed. I have so many questions here. What happened? Is it systemic? Is this a contagion event? Is it just sheer negligence? And would regulations have not had an impact in the circumstance?
I think we can give an all of the above for that, unfortunately. Yes, I definitely think it's a black swan event. I definitely think it was wildly unexpected, especially from that company and that CEO. And it's unfortunate that he was the white knight that everybody was looking to, talking to regulators and legislators and everybody in Washington. I think it's going to leave an obvious sour taste in their mouth. Now, as to whether it'll be contagion, I have to imagine so, sadly. Quite a few companies had exposure to FTX, both for trading in custody, but also obviously as investors. I mean, we're talking about Sequoia and BlackRock and the Ontario Teachers Union, right? I mean, really across the board, people had exposure. So I think it's going to take a bit of time, much like the Three Arrows Capital situation, to really see how this shakes out. It is unfortunate because it has decoupled. Nobody wants to see it decouple to the downside, of course, but it has decoupled from other markets and seemed to be showing some signs of strength and resiliency. And once again, we see a dump based on a self-inflicted wound. It's really unfortunate.
Yeah. What do you think happens to liquidity in this space?
I think it's going to be fine, honestly. I think this is one of those things where it unwinds, shakeouts, we see a reset, and then things start to resume as normal. Again, I just think that this is going to take a little more time. And as we touched on before, it's just going to be up to Washington now to determine how heavy-handed they come down as a result of what they've seen here. The reality is, though, that this is an offshore exchange, right? FTX.US, the US regulated exchanges are working perfectly fine, still have withdrawals. And so you can make the argument it's the fact that we've lacked regulatory clarity that's allowed this to happen. If people knew how they could operate in the United States investors, traders would not even be trying to find offshore solutions, and this wouldn't have been as much of an issue. So there really is some blame to be passed around in many places.
Yeah, and you know what, Scott, I do want to plug your podcast that was on this morning at 9:30, and folks, for watching on Trade Talks, you can catch on Scott's Twitter feed and check it out. But I thought Caitlin Long, one of your panels, was especially impressive, and the comments that she had, the insight that she had around the regulatory framework, and perhaps this wakes up the regulators to provide this investor protection. Maybe this is a silver lining that we see out of this Black Swan event.
It's definitely possible. I mean, I hope that they're still reasonable and realize that a lot of this could have been solved with regulation that's not heavy-handed and aggressive and that doesn't crush the industry. Right now, they're just pushing all the innovation and all of the enthusiasts offshore, and that's not what anyone wants. The best case scenario still is for regulators to come up with a reasonable framework that everybody can operate on, give clarity, and allow investors the opportunity to have exposure to this asset class.
Yeah, and Scott, your sweet spot is with the charts, of course. Does technical analysis work in this type of scenario?
I mean, it is interesting to see where things bounce and where they don't. But, we always joke that technical analysis is astrology for men, and there is a bit of more art than science to it. But interestingly, it is trading right now, right around the June low, right, which was the 2022 low, right around $17,500. So if you're into charts, obviously, and you think that that's been broken as support, you're looking for that to be broken as resistance. Right now, that's the level that I think price needs to break to gain a little more confidence and to take advantage, obviously, of this CPI print and sort of the bullishness in global markets.
And finally, Scott, when we think about, outside of Bitcoin prices and other altcoin prices, I really think that the narrative still remains that the underlying technology needs to be separated from the price. Because to your point earlier, there are some fascinating projects. There's a lot of innovation in this space that could really, not only move it forward for crypto, but for TradFi and DeFi going forward. I mean, that story does not go away.
Such an incredibly important point. All of this contagion, all of these issues are around centralized systems that were built to mimic the same problems that we were trying to fight against, right? The Lehman Brothers moments, the bank collapses, over leverage. Those are just things that were unfortunately replicated in the crypto space that have nothing to do with the value of Bitcoin or Ethereum or any of these other coins or the future use cases of the technology. This will be the underlying technology of so many different platforms and products in the future. It will be just like the underlying technology of your cell phone that you don't think about, of the internet that you don't think about, of your email that you don't think about. It will be just there running in the background and keeping everything together. So that is really important to note, that this has nothing to do with stopping the future of blockchain technology.
All right, Scott, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.